Good morning, everyone. You've just heard from Queen Maxima of the Netherlands why financial health was so important, but also how much of a change it requires in financial systems and how they work. So today, we're gonna put it in practice and listen to three wonderful innovators who are not just creating financial access through digital innovations, but really creating positive, lasting financial health impact for their customers. And so I'm going to start by asking each of you the same question. Tell us about your journey. Tell us about the products you've been designing, deploying, but especially, how do they improve the financial health of your customers? And I'm going to start with Matt, then Jessica, and then Michael.
Sounds great. I'm Matt Oppenheimer, co-founder and CEO of Remitly, and I started the business about 14 years ago after living in Nairobi, Kenya, where I saw personally how hard it was to send money internationally, but I saw how much more important and impactful it was for a lot of my Kenyan friends and colleagues. And so our vision is to transform lives with trusted financial services that transcend borders. Most of what we do is remittances, and we sent about $50 billion last year on behalf of our customers. And the way that it's driving financial inclusion, as many in this room probably know, is $2 trillion is sent every year in remittances, and it's historically been really expensive, been really inconvenient. It's been hard to build trust, which I'll talk about in a bit. Trust is a key part of our vision. But we've been able to save customers hundreds of millions, if not billions of dollars of their hard-earned money to be able to get money back to their loved ones who need it in a lot of low and middle income countries.
Thank you.
So for Flourish Fi, we're an engagement platform for financial institutions, and we partner with these financial institutions in order to achieve our mission to build financially healthy habits in individuals. So sort of built into who we are. And for us, right, by partnering with the institutions, we can go where people are, where they already have access, and then turn that access into actions that help and guide them step by step to building their confidence and resilience. And so we started the company in 2018 as a direct-to-consumer and then switched to B2B. And this mindset has always been with us from the start of how do we build for the financial health and for the resiliency of an individual through consistent, supported, rewarded engagement. And the mindset really comes from our personal experiences. I grew up under financial stress, fear of that unexpected expense that might come up. And so the consistent daily habits really is part of my belief in how you build financial well-being. And so we do this alongside our trusted partners in designing experiences that not only focus on their business metrics of retention, deposits, et cetera, but it's also about that experience and building those actions for their customers that help them gain confidence and resilience.
Michael.
Hi, I'm Michael Hershfield, founder and CEO of Accrue. What's interesting about sitting on a stage like on a day like today is everybody in this room probably could be sitting on the stage talking about what they're doing or what they're building to drive impact. Especially today, it's so important. I started a company in 2021 called Accrue Savings. It was an embedded savings product. We raised a bunch of money from venture investors on a beautiful idea that every retailer should offer a co-branded savings account. Just like a BNPL, just like co-branded credit cards, partner with some very large retailers, got some great investors, but the reality is that consumers, it was too much of a behavioral shift. Consumers didn't want to save with their local retailer. They were accustomed to using credit with them potentially. We've built a system of merchants driving credit usage and obviously society itself. So interesting enough, we pivot a little bit, but with the same vision in an embedded wallet. We all know there's a rise of mobile wallets. Starbucks, everyone has the Starbucks app on the phone. You pre-fund into your wallet. So when we think about how we built this beautiful, beautiful vision around savings, we went too far ideologically. We narrowed a little bit. Financial inclusion means going where behaviors and consumers are, not where we necessarily where we dream of them. All of us dream of a vision of what consumers are going to be, but it needs to be a great business. So we built this amazing business building an embedded savings wallet, embedded wallet for merchants all over the United States.
Thank you very much. And indeed, remittances, savings, and resilience will be increasingly important in the world where we're living and where we're going forward. So thank you for the great work you're doing. Let's talk a little bit about the business models that you had to put together to be able to deliver these impacts. And I'm going to start with you, Michael, and ask you to reflect on your journey.
Yeah.
You just told me that when you developed the idea, it didn't resonate with everyone. So how did you have to set up your business model so that you knew you were going to be really outcome-oriented, inclusive, and what maybe obstacles did you face along the way?
What's so interesting is that the big ideas can resonate. It resonated with investors. This idea resonated with investors. Obviously, resonated with some of the largest merchants in the United States when we launched and started the idea. But when we went into market, product market fit wasn't there. Mm-hmm. And you can get addicted to the ego of attention and press. But when you're not seeing real ROI, real revenue as a business, you have to reflect on who you are. So, it took a lot of work. Product management, looking at the data and saying to yourself, well, what is the business model? What is the product where consumers are? And so trends speak for themselves. Consumer data speaks for itself. For us, there are the best loyalty programs in the United States. Use actual tools that you can leverage around some of this vision. Let's go where that is. Let's build digital mobile wallets for merchants like Starbucks, like Dunkin' Donuts. It's telling you, the consumers are telling you that there's a way and behavior for us to inspire them on their terms. And that's how we built a beautiful business around that.
Yeah, so data, listening to customer. This leads to a perfect question for you, Jessica. How do we know it's working? How do we measure success beyond growth? And be certain that you're reaching customers where they need and helping them build financial health.
Yeah, similar to your point, I think lots of people in the audience could speak to this in different ways. And I had the opportunity to have some of these conversations. And to be honest, it's really hard. Out of the conversations that we came, we're still finding ways collectively that we can understand. Are we actually driving meaningful behavior change to build for financial health, or are we just driving activity, right? And so I think that there's a lot of data that we're working through, that we're looking at, right? And it needs greater context a lot of times when these conversations. How do we get the full context to get the full picture if what we're doing is actually driving meaningful change? And so, right, for us, there is a partnership and collaboration that has to happen with the financial institutions we partner with. And so we're able to look at their data and understand who are their customers, who are the segments, and start to think about what is it that their behavior already is. And then we measure for the indicators of the behavioral change and of the actions that they're taking that then can say we're building towards more financial health, more financial resilience. And so one of the things that really helped us validate what we were doing and whether or not it was working is we had a Georgetown study done of our platform. And instead of is it working, we looked at what happened when we didn't have it up. There was a pause in the platform from something random that had to happen, right? And so in that time that it was down, we saw on-time loan payments go down by 31%. We saw bill payments decrease by 18%. So that was an indicator to us that, okay, the consistent engagement that we're doing is actually driving some of these positive financial behaviors that we're looking to do. And so, right, we work with the financial institution partners to then look at these indicators. Are people saving more money? Are they doing their on-time payments? Are they, then coming in, managing their finances on a regular basis? And these things help us. And I think as we partner, that's important for us, and collectively, and as we build more partnerships as well, I think together we're going to get to actually measuring this meaningful financial health building that we are all striving to do.
Fantastic. Thank you, Jessica. This really resonates with us at CGAP, where we're driving, with the support of the MasterCard Center for Inclusive Growth, a Financial Inclusion 2.0 initiative, precisely aimed at driving focus on indicators of outcomes and behavior change for customers. But let me turn to you, Matt, now and look forward. Where is Fintech innovation heading? And in a context where AI is going to underpin probably a lot of future developments, how do we ensure we remain inclusive, we are responsible, and we reaching equitably to all that remain insufficiently served?
Yeah. Yeah, I think if I start with the umbrella of what we were just talking about is having a business model that's aligned with driving financial inclusion, one of the things that we've done is take a lot of costs out of the system. So instead of going to a physical cash location, customers link their bank account and debit card. That brings down costs on behalf of customers. I think from an AI standpoint, there's a lot that we can do to continue to drive down costs, whether that's delineating between a lot of bad actors we have to prevent from using our platform, from good customers that are trying to get transactions through instantly to their family. AI can obviously be used for that, drives down cost. Our customer contact is about 5 to 10% of revenue, depending on the timeline. And if we can automate more of that and have things like our virtual assistant, which is a large language model, then that also drives down costs. So I think there's a lot of elements like that where we can leverage AI to drive down cost, which then furthers our vision and mission of continuing to drive down more costs and pass along more savings to customers. But the fascinating thing is that I've learned throughout the journey is that a really important part of financial inclusion is meeting customers where they're at. And I came in with somewhat of a naive view that if we just offer a lower price service, then customers would come. And I overlooked the fact that if you think about like a Maslow's hierarchy of needs, what do customers care about the most? We have to collect for compliance and security reasons, name, address, date of birth, social security number, tax ID, a lot of personal information. And we're asking customers to give us their money. So if customers say, I can save $1 or $2 here, versus is my identity or my money going to get stolen, a big percentage of my income, they will choose to pay a bit more for a product that they trust. And so I think there's ways to leverage AI to also just continue to not only drive down costs, but reduce defects, build more of that trusted experience. 90+% of our transactions are delivered in less than an hour. We're not going to be satisfied until that's at 100%. And there's a lot of technology that we can leverage to do that.
So you're optimistic about the potential of AI. I want to take the last minute to ask each of you, what makes you most optimistic in the ability to continue developing financial products that truly improve the financial health of people in the world?
I resonate. I think that fear is a natural instinct, and I think that AI has scared a lot of us. There's reasons to be scared. But rising tide, I look at how we engage with our employees, I think there's going to be greater opportunity to bring people in to work at all of our organizations, expand the skill sets. We are not narrowing ourselves to a set of knowledge and a narrow bit of locations. There's huge opportunity around. I'm deep. I mean, obviously, we're all entrepreneurs on this table. Our job is to be positive and optimistic. So there's that ask is inherently challenged. But I mean, like, this is a very exciting time for technology. We have tools that are as entrepreneurs, as people that are working at these organizations, both private and public. This is not a scary time. I think this is an opportunistic time for financial inclusion because the tools are getting more accessible. They're more accessible to save, more expensive to be thoughtful how you send money. The technology is bringing a hopeful time rather than a scary time for an entrepreneur like myself.
Wonderful. Jessica?
Yeah, so I started my career in how technology can grow community and build community and the opportunities that technology is going to open. So I started very optimistic. Then I got very scared. And I realized these things can live side by side. There is things to be fearful of and that could happen and that we have to be careful. We know that. And when we can focus on that to build the trust, right, that you're talking about, right, then we get to really open up all the opportunities that can happen. And so what makes me optimistic is this possibility to really personalize, really care, really understand a person, go where they are, meet them where they are, physically, mentally, all of that, right? We have so much opportunity to do that now. And then I don't know, I'm like a community person like this, talking to everybody, knowing that there's so many people out there in this room, out in the world, that want to do this and want to do it well. Like that gives me optimism, is the spirit and the energy for it.
So if there's one thing I take from this panel is that there's a lot of technological, digital innovations that can really improve the financial health of people in the world. But we need to listen to customers. We need to respond to their need, design for their need, and build their trust.
Yeah.
Thank you very much.
Thank you very much.
Thank you.
Great job.